This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, July 12th, 2016. Euro dollar. So the euro recently topped out at 111.87, and since then the pressure has been on the downside, with the market looking like it wants to gravitate back towards next key support at 109.12, which guards against more significant medium-term support at 108.23 further down. It's going to take a break back above 111.87 to take the immediate pressure off the downside. Sterling dollar. So cable remains confined to a very well-defined downtrend, with the market trading just off recent plus 30-year lows. We have seen a bit of a correction in recent trade, but it's going to take a break back above the previous weekly high around 133.40 to take the immediate pressure off the downside. Until then, there's risk for deeper setbacks towards next key psychological barriers at 125. Dollar yen. So a strong bullish reversal day in dollar yen on Monday, with the market now potentially looking to trade higher, but it's going to take a break and close back above 103.40 to take the immediate pressure off the downside. Until then, the pressure remains on the downside, with risk for another topside failure and retest of those recent 2016 and multi-month lows at 98.99. If we do see a break back above 103.40, it will take the pressure off the downside and expose fresh upside, potentially back towards next key resistance at 106.81 in the form of that high that we saw back on the 24th of June. Euro Swiss. So Euro Swiss continues to be very well supported on dips, with the market trading above the 107 and 108 area. Ultimately, a close back below 108 would be required to start to put pressure back on the downside. Until then, there's risk for the market to continue to be very well supported on dips towards 108, with the potential for fresh upside back towards recent range highs in the 111.30 to 112 area. Aussie dollar. So Aussie continues to show signs of stalling out into corrections, with this latest push higher stalling out yet again ahead of recent highs at 76.47. It looks like the market could be wanting to put in a medium-term lower top at 76.47 ahead of the next major downside extension back towards and eventually below 71.45. But if the market breaks back above 76.47, it will negate this outlook and expose a more direct retest of the 2016 high at 78.35 further up. Dollar CAD. So clear signs of dollar CAD putting in a major base here, and a break back above 31.89 will confirm that base and open the door for fresh upside towards the 135 to 140 area. A break back below 26.55, however, would take the immediate pressure off the top side and put a retest of the 2016 low in play. Kiwi dollar. So Kiwi has recently traded up to a fresh 2016 high above 73, but the market is once again showing signs of exhaustion up towards this level. At this point, though, we need to see a break back below recent lows around 70.80 to take the immediate pressure off the top side, while inability to do so will keep the focus on the top side and a push beyond 73.07. SPX 500. So the S&P 500 has traded up to a fresh record high on Monday, with the market trading to 21.44 thus far. At this point, the pressure remains on the top side, and we could see these gains extend to the 21.50 to 2200 area. However, on a longer-term basis, there continues to be signs of stalling out above 2100, and it'll be interesting to see if the market rally once again stalls out in favor of another bearish reversal. But we would really need to see a break back below 2073 to take the immediate pressure off the top side. Gold. So gold continues to trade with a very constructive outlook, with the market now focused on a retest of a test of measured move resistance at 1400 further up. Therefore, any setback should be very well supported towards 1300, with only a break back below 1250 to really compromise the constructive outlook for gold.